Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. If you're a Navy Federal member and you recently received an email about upcoming changes to your Navy Federal credit card agreement, you might have skimmed it and thought, okay, that's just another update. But here's the truth. These kinds of notices can quietly shift how you pay in interest and how your credit card works behind the scenes, and what you should or should not do with your account moving forward. In this video, I'm going to break down the Navy Federal notice word for word and translate the legal jargon into plain English and explain exactly what it means for you as a cardholder. I will also share what steps you can take right now so you do not get blindsided with higher costs later. By the end, you will not just know what this change means, you'll also know how it affects your finances, your credit strategy, and your everyday decisions when you're using Navy Federal credit cards. So without further ado, let's get right into the video. I did my best to crop the email, that way you'll be able to see it in its entirety. And before we begin, I want to start by telling you what this email is not. It's not Navy Federal punishing you because you took out a cash advance at one point, and it's not an email about decreasing your credit limit. This email starts by saying, thanks for choosing Navy Federal for your financial needs. This notice concerns your Navy Federal card ending in 3001. That's my flagship card. Effective October 1st, 2025, we're making changes to your flagship credit card agreement and disclosure. So what this means is simple. Navy Federal is updating the official contract that I agreed to when I opened up my flagship card. They are required by law to give me advance notice for any changes that impact my account, especially changes to interest rates, fees, or other major terms, and they're legally bound to let you know as well. The important detail here is the effective date, October 1st, 2025. That means you still have time to prepare to understand how this change works and to decide whether you want to adjust how you use your card. The biggest headline is about your cash advance APR. Right now, cash advance interest rates on your flagship card are variable. That means they go up and down based on the US prime rate, which is published in the Wall Street Journal. Navy Federal adds 2% to your standard APR to calculate the rate. Starting October 1st, 2025, this will no longer be the case. The cash advance APR will switch to a non-variable fixed rate of 18%. That means from that date forward, every cash advance you take out on your card will accrue interest at a flat 18% rate until it is paid off. This is a big change because it takes away the connection to the prime rate. Instead of floating with the market, it locks in your interest rate at a set level. The email goes on to say the change to the cash advance APR is due to market conditions. So what does that mean? Interest rates in general have been volatile the past few years, and the Federal Reserve has been raising and lowering rates depending on inflation and economic growth. Because of that, credit card APRs that are tied to the prime rate have been moving upward. So Navy Federal is making this change to create predictability for them and for you. So think about it. If the prime rate spikes higher and your cash advance APR is tied to it, you could suddenly be paying 25% or more in interest. By fixing the rate at 18%, Navy Federal is basically saying this is the ceiling that we are going to stick with, at least for the moment. On one hand, that protects you from interest rates if they keep rising. On the other hand, it also means you do not benefit if the rate drops back down. Now, here's where many people get confused. The email explained that the transactions posted before September 2025 will keep their old variable cash advance APR until those balances are closed off. In other words, if you already have a cash advance balance, that rate is not changing. But any new cash advance transactions posted on or after September 2025 will eventually switch to the new fixed 18% rate once October 1st arrives. So you have this 1 month transition period where new advances still start at the variable rate, but then they will move over to the fixed rate. This staggered setup is basically Navy Federal making sure they are following regulations about notice periods while also preparing to lock everything into the new structure starting October 1st. There is a small detail tucked in that says if you're being charged a penalty APR for cash advances on October 1st, 2025, the revised cash advance APR described below won't go into effect at this time. This means that if you have triggered the penalty rate because of late payments or other account issues, you will not see this new fixed 18% right away. Instead, you will keep paying the higher penalty rate until you fix the problem. Once the account is back in good standing, then the 18% fixed rate kicks in. This is Navy Federal's way of saying good behavior gets you a fixed rate, or any bad behavior or whatever triggered that penalty APR will keep you in that penalty mode. All right, so let's continue. The notice also explains that the daily periodic rate of your cash advance APR is being updated to 0.049315%. And this is just a mathematical way that the 18% APR is applied on a daily basis. Now you're probably asking, why should you care? Because with cash advances, interest starts accumulating immediately. There is no grace period like with regular purchases. So knowing the daily rate helps you understand how quickly debt can snowball if you borrow cash on your card. For example, if you take a $1,000 cash advance, interest of about 49 cents accrues every single day. After a month, you could already owe nearly $15 in interest even if you did not use the card again. Another change Navy Federal made in this update is clarifying how credit limit changes can occur. So they revised the section called your credit limit and the maximum amount you owe Navy Federal. This is not necessarily a change in how limits work, but it is a reminder that Navy Federal can adjust your limit at their discretion. They might lower it if they think your risk has gone up, or they might increase it if they see good payment history and low utilization. As a consumer, this is your cue to always pay attention to how much of your limit is being used and manage your profile in a way that makes Navy Federal confident in raising your limit, not lowering it. So here are the key takeaways from this notice. First, cash advances are almost always a bad deal. It kind of just depends on what you're doing. They carry no grace period, they have high fees, and interest rates start immediately. Even at a fixed 18%, they are expensive compared to other options like personal loans or even using a credit card for just purchases. Second, the fixed rate change means that Navy Federal is looking out for themselves. They are locking in a profitable but not outrageous rate. That means you have stability but not necessarily savings. Third, this email is a reminder that you should always read the fine print. Too many people skip this notice and then they are surprised when they get hit with a higher interest charge. So next, let's talk about what you should actually do with this information. If you currently have a cash advance balance, I would suggest paying it off as soon as you can. Right now, if it's still at the variable rate, which could be lower than 18%, depending on your card and exactly your standing, clearing that balance will save you interest before the change even happens. Now, if you were considering using your card for a cash advance, I would think about this very carefully. Even though the fixed rate sounds stable at 18%, that's still very high. You might be better off looking for an alternative like a credit union personal loan, maybe a home equity line of credit, or even a 0% intro APR balance transfer if you do qualify for one of those offers. If you never use your card for cash advances, this change won't really affect you directly, but it is still smart to know what your terms are and how they're shifting, because lenders use these updates as a chance to clarify rules, adjust definitions, and tighten policies. And finally, keep your account in good standing, avoid late payments, keep your utilization low, and make sure you do not trigger a penalty APR, because once you are in that penalty mode, you don't get the benefit of the fixed 18% until you clean up your account. Now let's just take a look at the bigger picture for a second. This notice is not just about Navy Federal, it's part of a larger trend in the credit card industry. More lenders are moving away from variable cash advance rates that are tied to the prime rate because it creates unpredictability. With the Federal Reserve constantly adjusting rates, credit card issuers want to shield themselves from the volatile movement. Fixing the cash advance APR is one way to do that. For you, the consumer, the lesson is that credit card terms are not set in stone. They can and will change over time, and your job is to stay informed, read these notices carefully, and always adjust your strategy when the rules shift. So what does this all boil down to? Navy Federal will lock in a fixed 18% APR for cash advances, and that's going to start October 1st, 2025. If you currently have an existing balance, don't worry, they stay at the variable rate until paid off. If you take new advances, they will roll over to the fixed rate after September 1st. And if you are in penalty mode, you do not get the benefit until your account is restored. So what should you do? Avoid taking cash advances if you can. Pay off any balances before these changes take effect. Explore cheaper borrowing options if you need quick cash, and always stay on top of notices because they will tell you how the financial playing field is shifting. Navy Federal is also thanking you for being a member at the end of the email, but the real thank you is when you take control of your credit, understanding the rules and use them to your advantage instead of paying for unnecessary interest. If you found this breakdown helpful, please make sure you subscribe to the channel for more deep dives into credit card updates, credit union strategies, and the latest money moves that you need to know. If you know anyone that had questions about this particular email, please forward this video to them, share it so they can get more clarification, and let me know if you have any other questions in the comments below. Thanks for watching, and I'll see you in the next one.